It's been thousands of years since Greek politics had implications for those well beyond its borders, and it's been ugly. ANZ Chief Mike Smith says the European wholesale funding markets are essentially closed for the first time since Lehman's collapsed. At least Asian and US markets are open, and Australia's major banks have most of their wholesale funding for this year. Fitch downgraded Greece's credit rating, and more damaging, Moody's downgraded the credit rating of 16 Spanish banks. People are taking their money out of Spanish and Greek banks. Here's what's happened to major Spanish bank Bankia. The share price has more than halved. Investors are getting nervous about banks again. This graph represents the average cost of insuring against a bond default for 12 big North Atlantic banks. You can see that the price of that insurance has gone up. It's well above 2009 levels and almost back to late last year's peak. It's been a very ugly time for shares. The Australian market has had its two worst days of the year this week. The 110-point fall brought this week's slide to more than 5%, the worst weekly performance in at least 8 months. Mike Smith's comments gave momentum to the selling, with most major banks off more than 3%. NAB fell over 4%. The rising anxiety also hit resources hard. Rio was off 5%, BHP fell 4% to a 3-year low. Only gold shares like Newcrest bucked the trend due to the higher bullion price. Even some of the defensive stocks were sold off more than 1%. The falls here were a little less severe than Tokyo and Korea. The risk-averse environment saw the Australian dollar fall 1 US cent to a new 6-month low. Markets are now betting that in 18 months' time, Australia's official cash rate will be below 3%, lower than it's ever been since deregulation.